I was excited, and I said, look, here's the thing about a trend. You can get involved in a trend, and sometimes when you're in early, you may have to wait some time before things go up, because if you're in too early, in the beginning, things can move down for a few months. And that's exactly how we positioned. And that very early stage, I talked about commodities. I talked about what was going to happen with oil. I talked about what was going to happen with copper prices. I talked about a lot of different ones. But let me do a little case study here and show you one specifically, because I know someone asked me this in the beginning to talk about it. What I talked about in the beginning was something called uranium. And in those days, we only had $5 million in the fund. And what I said to the members is, I said, look, I want to take 20% of the portfolio, and I would like us to buy a basket of uranium stocks. But the price of uranium has gone from $43 down to $7.10 over the last 20 years. And I said, perfect. No one ever talks about uranium. They say it's the worst investment on the planet. Perfect. So what you're telling me is I should look a little bit more at it. Yeah, well, I don't know. So what happened is I start to look at the fundamentals around the world, and I see that we are carbon fuel-based society. Very scary. Environmental. Oh, bad. We need clean fuel. We need something better. Nuclear. Right? We need something better. Something that doesn't have emissions. CO2 emissions. So I looked at it and I said, okay, 95,000 tons of demand worldwide, and there is only 66,000 tons of supply. Well, when I first look at it on the surface, I say, well, I look at those numbers and I say, well, why don't they just produce more? Well, what happens when the price of uranium went from $43 down to $40, down to $35, down to $30, down to $25, down to $20, down to $15? Most uranium producers needed a price of over $20 to be profitable. So when it was below 20, they all started to close down because it cost more to produce it than the revenue that they would get. 15, 10, 9, 8, 7, 10. I looked at these and I said, wow. When I started to look further, when you close down a uranium mine, you just don't close it down with a sign that says out of business temporarily. No, you plow it over, and there's about 40-page checklists that you go through and all the environmental steps that you have to go through. And then a lot of these mines will never be reopened. Residential districts have moved closer. There's a lot of things that can go on in 20 years. Then when you look at it further for new discoveries, it takes about 10 years from the time you find a uranium discovery to when you can get it into production with a mill nearby and start producing uranium. And I looked at that, and I got really, really excited. I said to the members, I said, well, with $5 million, let's take $1 million of it, and let's buy a basket of uranium stocks that are currently in business. Because most of them had gone out of business. We did it. And you know what happened? Okay, someone take a guess, all right? Raise your hand and take a guess. All right? We put our $1 million in, and 6 months later, what do you think happened? It went down. It went down. And I came out to a meeting, and like everything, people, when they're investors, they don't look at the fundamentals. They become emotional. They're like, oh my God, the price of our portfolio has gone down. Why are we involved in uranium? Look, the price is only going to keep going down. And then when I brought in and I looked at the fundamentals, what happened is demand was up now close to 100,000 tons. And supply was down to about 64,000 tons. And you know, for everyone in the room, let me tell you this. 95% of your money is made in 5% of the time. For the good traders in the room, those who trade all the time, 95% of your money is made in 5% of the time. So what happened is, all of a sudden, uranium started to get some attention. And when uranium got attention, that $700,000 portfolio, in a period of less than 90 days, blew through $3 million. Okay? And then months go by. The price of uranium goes from $7 up to $35. At that point, the members said, Mike, is this the end of the trend? And I said, no. And they said, well, we've had these massive gains. Shouldn't we just sell? And I said, no. All right, very quickly, let's go, team. Let's get out those sheets. Yes, let's go. What you have in front of you is you have a case study. I'm going to teach you how to make lots of money for yourself. Is that good or great? Great. All right. Who's learning something so far? Fantastic. All right. So, what happened was, at a club meeting in Calgary, the members were saying, well, we should just sell it off. And I said, well, what I'm going to do, and I did this live online, I said, we are still very early stage. Supply and demand fundamentals are nowhere near one another. Nowhere near one another. And what we're going to do is I'm going to show you that we're still very early in stage. So what you have in front of you is a list of stocks that I bought live at a club meeting, the price that I paid at a club meeting for the portfolio, and then the results. The meeting I said in a year I'd come, but it was 11 months later. And as you can see from there, there we go. As you can see, the original investing, and that's the account that I had at Canaccord, I put in $86,590. 1 year later, the sale value was $237,000 for a gain of 247% in 1 year. Who would like to get those type of returns? Okay? Now, the short answer is you can. The short answer is you can. You no longer have to be not empowered. Oh, there you are, Kevin. You no longer have to be not empowered. You can completely empower yourself to make money. Now, let me give you an example. Here's what happened. At that club meeting, and at other club meetings that I had at that point, it was only Vancouver, Edmonton, and Calgary. Talked about uranium, bought these stocks. Now, people don't understand how to do their own due diligence. I realize they don't know what 43101 compliant means. They don't know how to analyze and scrutinize a uranium company. But what they did understand was the trend. They understood the trend. And what they said is, look, I believe in that teaching, Mike. I believe you're right about the supply and demand fundamentals. And you know what I'm going to do? I'm going to keep it simple, but here's what a lot of them did. I made the suggestion, but they empowered themselves. They were an action taker. Let me hear it from you. They were an action taker. And what they did is they went out and they looked for, and here's the suggestion I made, look for companies, all they had to do that were 43101 compliant, that had management teams that had done it before. And then I went around in each city a few months later, and I said, okay, how many people listen to the teachings that I have? And just put all the hands in the room, go up. And I said, okay, how many people in the room are action takers? Well, 30% of the room, hands in the room go up. And I said, okay, well, how many people actually bought uranium stocks? And at that point, about 20% of the hands in the room went up. Then what I did is I went around the room and I said, okay, over the past 12 months, tell me what your returns have been. Around the room in each city. 40%, 80%, 250%, 500%, 70%. Then I go back and I ask each person to stand up again. I go through the room and I said, do you have a background in mining? No.